Guys, what's going on? It's Tere Calloway, aka T Cal, and today we're here to talk about buying a home as a first-time home buyer. The first thing we're going to address is this. Buying a home is not the same as paying rent to a bank. That is not what a mortgage is. I've seen that a lot lately, have no idea where it came from, but it is nothing like that. So let me break it down for you. I want you to think of your home as a bank because that's what it is. It is an asset, not a liability. When you pay rent, that is a rent expense, and that is going straight into the trash. You will never recover that. When you pay a mortgage, that mortgage payment is turning into equity. Not all of it, but a portion of it. And that equity is what you own in that home. Now, that's not the only way that you earn equity. You also earn equity when your home appreciates in value due to growth around it. So, for instance, say that you buy a home for $100,000. 3 years later, that home is now worth $200,000. Not because you paid that much into it, but because of things appreciating around it. You don't have to sell that home to take money out of it. Now, you could sell it, and even if you still owed $100,000, you would profit $100,000. Or you can do what's called a cash out refinance. With the cash out refinance, it allows you to pull money out of the home based off of the equity that you've earned. So essentially, you get to pull out a majority of the money between $100,000 and $200,000 that you've earned in that home. Or you can get what's called a home equity line and borrow against that equity that you've earned. There is no place on earth, this galaxy, where you can do that with something that you're renting. If you're renting an apartment or renting a home and the value of that home goes up, all you're going to do is pull money out of your wallet and pay more to the landlord because they're going to raise that rent. And that's why it's so important to have ownership, because nobody can raise your rent. Your mortgage is what it is. And there's so many ways that you can improve the value of your home and also make money off of it. So anytime someone tells you that renting is the same as owning, please don't let them discourage you from purchasing a home. Now it's time to tackle the myth of down payments. I've had a lot of millennials, I am one as well, tell me that their parents told them that they need to put at least 20% down on a home. That is not true. The only time you need to put 20% down is if you want to avoid PMI, which is private mortgage insurance, and take that off of your mortgage payment. Now that's a few $100s a month, but for a lot of people, they do not see that it's worth it to put 20% down on a home, because today you can put as low as $0 down on a mortgage. And I'm serious, I mean $0 down. I've had a multitude of clients really get into a home with $0 down. So there's FHA. FHA typically requires 3.5% down. Conventional typically requires as low as 3% down. But there are also programs like step-up loans. A step-up loan takes your down payment and rolls it into the loan. So it's essentially a 100% loan that you are purchasing a house. Also, which is really popular down here in Huntsville, Alabama and the surrounding areas, is a USDA loan. A USDA loan is a rural development loan. That loan allows you to buy a home in an area that's considered rural at the moment and be able to buy it with zero down payment. It is an amazing loan, and I'd say probably 90% of my clients have taken advantage of it. It is amazing. So the next thing we have to talk about are closing costs. Closing costs are something that a lot of people aren't aware of, and I wasn't aware of until I bought my first property. So closing costs include things like a funding fee, origination fee, title fees, as well as recording fees. A bunch of fees that most people have no idea what they are, but we have to pay them. Now, your realtor and lender are supposed to give you an estimated closing statement. An estimated closing statement is something that shows all of your costs and what they will be when you close on a home. Now, mind you, it is an estimate, but it will be itemized so you can see exactly where your money will be going. That is something that you definitely want to keep in mind when looking to purchase a home, because it's not just the down payment, you also have to pay closing costs. Now, we can't talk about purchasing a home without talking about credit. So there are 3 credit bureaus: Experian, Equifax, and TransUnion. I'm not a fan of any of them, but unfortunately, it's something that we have to deal with. So all 3 will give you different scores, and lenders use a specific score in order to determine how risky you are as far as somebody looking to purchase a home and having a mortgage with them. So what most lenders do is they use the middle score. What the middle score means is they throw out the highest and they throw out the lowest. and go with the middle score for your mortgage. Now, this is extremely important because a lot of loans have certain limits that they will allow someone to borrow. For instance, I know FHA, they can do it as low as 580. USDA, they can do as low as 620. VA, I believe they can do as low as 580, but these things are very important if you want to be able to secure a home. Now, even if you have bad credit, it's not the end of the world. You can hire a credit repair specialist and they will work on your behalf and they can get your credit up extremely quick. I've seen it as much as 30 days and someone's points going up 97 points in 30 days. That is a huge difference, and it was amazing because they were able to purchase a new home with that credit boost. So that is something to look for, and definitely make sure that you take care of your credit. Now, there are free tools that I recommend to check on your credit. Credit Karma, Credit Sesame. Also, if you have a credit card through your bank, they typically have a way for you to access one of the credit bureaus. Now, there's a lot of stuff going on. I know Credit Karma was trending recently because people are saying that their scores are nothing like what the lenders may provide. Sometimes that may be true. I know in certain cases that Credit Karma is actually lower than what the lenders pull. It all depends on the borrower. Now, the good thing about Credit Karma is it lets you keep an eye on key things like credit usage, collections, late payments, and also the amount of accounts that you have. So if it's not good for anything else, it'll let you monitor your credit and make sure you're on the right path to purchasing a home. Last but not least, we're going to talk about my favorite thing, which is new construction. If you know me, you know I've become somewhat of a new construction specialist, and it wasn't by design, it just sort of happened. So when I mention new construction, I'm talking about a builder that owns a subdivision and is building homes in that subdivision. A lot of top ones in the Huntsville area are Davidson, Breland, D.R. Horton, Smith Douglas, to name a few. And what they do is they allow you to choose between a number of floor plans. And once you look through the floor plans and choose which one fits you, you can design and customize a lot of the interior features. Now, I'm not saying they're going to let you put a glass ceiling in there or vault some ceilings that aren't vaulted. You don't typically get that much leeway, but things like customizing the floors, customizing the brick, customizing the way you want the kitchen to look, the type of things that go in the kitchen, if you want a farmhouse sink, if you want recessed lighting, if you want tray ceilings, if you want to have a luxury master bathroom with a separate garden tub and a stand-up tiled shower, choose the tile, a lot of things like that. So it's a really awesome thing that you're allowed to choose and have. And I mention new construction because a majority of new construction builders will pay a significant portion, if not all of your closing costs, which is amazing because if they pay all of your closing costs and you have a USDA or a step-up loan, you're getting into a brand new home for $0 down, literally $0 down. And it is not a scam. I know it sounds too good to be true, but I promise my clients will vouch for this. And it's an amazing feeling. Now, most builders do require an earnest money deposit, just like any other home on the market. And that can be as low as $500 and some require none. But earnest money is a deposit. It's not a fee. It's not an expense. When you pay that deposit, it is then credited back to your closing costs. So if you don't have any closing costs or any down payment, you get a check back at closing for your earnest deposit. Also, the typical build time for a new construction home is 6 to 8 months. Now, that works out perfect for some, but may sound scary for others. But there's something called spec homes. Spec homes are homes that are built without a specific buyer in mind when it's built. So these homes are already in the process of being built or already finished, and you can also purchase those before they're finished or as soon as they're finished and get into it without having to wait 6 to 8 months. So there are a multitude of avenues that you can take with new construction, but it is an amazing thing, an amazing way for first-time home buyers to ease their way into home ownership. Because unlike a home on the market that is older, you're probably going to have things that you need to fix. You're getting into a brand new home that has nothing wrong with it. Also, new construction homes, typically all that I've dealt with, have warranties. They have a 1-year warranty for a lot of interior cosmetic things, 2-year warranty for things in the walls like plumbing and electrical, and 10+ year warranty for things like foundation, roof, structural things. Also, some builders' warranties are able to be passed to the next buyer, which adds value to your home because when you sell your home, you can include that warranty in it, which gives the new buyer a peace of mind. So honestly, there are just too many things to list with new construction, but you can definitely contact me if you have any more questions or want more information. I thank you guys for tuning in, and I really hope you guys enjoyed this and that this was informative.